Hello, everybody. Well, I know it was a rough week overall in the market, but I hope first off you guys have a great weekend. But as we get down to the nuts and bolts of the stock market right now, we have to live in a world of reality. And I got to be honest with you, this kind of price action in one of the most bullish months for stocks is really bad. This is not good at all. What we're seeing here, it's very bearish, and the continuation, the theme that we've even seen during the entire 2013 and 2014 uptrend here. As you can see, what's the clear color in the volume bars that stick out on the above this yellow line? It's clear, it's red. It's the same pattern we saw in 2012 also. But 2012 was at least rough. That was a terrible year for me. But everything got back on track in 2014, 13, 14, and 2015. I'm having a significant drawdown from account highs, but I'm still up in the cash account over 10% on the year. And considering what this market's done, it's hard to be too upset about that. Have commissions cost a lot? Sure, but you know what? Compared to the overall dollar amount of my account, it's not that bad. But I know that I could never do this methodology like if I only had an account at E-Trade or Scottrade. I know I couldn't do it, so I got to thank Interactive Brokers for allowing this methodology to work. Because if it wasn't for Interactive Brokers, I probably wouldn't have made any trades this year. 2015 is going to go down as the first year ever that not one quote quote hot technical setup happened. Not one. 2013, 2014 had very few, and you can thank all these big, tall red bars as probably the biggest reason why. But 2015, man, that was even more impressive as nothing showed up that was amazingly hot. So if we have to only go long stocks where that's a 5%er, that's a 10%er, that's a 20%er, we would have had about 20 trades all year long because of the 5%ers. And for 10%ers and 20%ers, we would have had zero. Just like in 2013, 2014, where only a few showed up. And even then, because of the skew of the volume on the declines to the no volume on every single rally, it was hard to take any large position in any one name the past 3 years. So that trend continued into the late months of 2015, where I need to seriously apologize. It isn't my fault, but it's what the market does. You know, we looked like, once again, we were on the cusp of another low volume breakout, and it appeared that we were going to break out to new highs at the beginning of December as we went into historically one of the most seasonally bullish times of the year. So the fact that we didn't do any of that, the fact that we're rolling over, which I warned you if we do from this V-shaped move, it was going to lead to some nasty price action, and the fact that we're doing it on above average volume is terribly bearish, terribly bearish. And like I said, that NYSE looks terrible, absolutely terrible. The transportation stocks are already nearing new lows, just absolutely atrocious. And the Russell 2000 never got going at all during that V-shaped rally move off the October lows that was choppy and then led to that super weird V-look move. So it's been ugly. I mean, it's been an ill-conceived market. But damn stocks like CRM, they look like if you don't buy this breakout and if it runs, I'm gonna feel like a damn fool. And then BABA, with its reversals, it's hard not to want to think that okay, this thing is definitely bottom. I mean, even the accumulation pattern, is basically right, because even as it downtrended, it had some intraday reversals with these big tall red bars. And then you see stocks like, what was the big one today that I thankfully am already out of because I put my final sell stop below, I think it was this day's low, and I was already taken out of it. But, when you see moves like this from stocks that start to look like they're about to build a very bullish consolidation pattern, that's bad, guys. Those are fake outs. Those are suck outs, and they're painful and costly. And that's why if you don't, cut your losses, you're doomed. And that's why today we have a ton of sells. There's even no need to go through them all because there's so many of them. Just look at the new positions page under the 100% sells and realize there's still about 45 more names I'm still long in both of my portfolios. Or sometimes I didn't get long in the name because I was fully invested, which, could be a blessing now. But overall, still crazy, just crazy, crazy market. So if you don't have a full sell like today for Zixi, my final sell stop was this low a day, but with today's sell-off, it now becomes this day. So in any long position, we still have these most recent lows, or that's it. If they breach these most recent lows, I'm out. So with Zixi, like 526 STZ is a 50% sell, but on an end-of-day basis, all my stops are getting raised to 137.49. Same with something like Inflex. I'm already out of it, so it's irrelevant. EFSC, I'm already out, but like Nuon. So Nuon, I'm still long, but it's a 50% sell. 50% was sold intraday today when it moved below 2016, but you know what? Now I'm just raising it all up to today's low day, 2014. That's it. So if it fails here, it fails 2014. I mean, technically, I guess since 2014 is so close to Cluse, I can't remember what TV show I got that from. On 1988, you could still use 1988 if you really wanted to, but I'm telling you, if it looks iffy, like so the previous sell stop levels down here at these lows, I'm going to move it up. It's going to be 299 because I still have that one. ePay I'm completely out of, but ePay, if you're still long, 2870 becomes your new final sell stop level. But getting back to the market really quick after going through all those sells, I also want to show you something else. First, let's really quick look at the advanced decline line in the overall market for further confirmation. The advanced decline line, where's my line chart? Oh, guys, sorry. I got to find the line chart that I have in one of my tabs. There it is. So if you look, this advanced decline line for a really strong market rally should be uptrending. So whenever you see the advanced decline line falling, any rally attempt, you're going to want to see some positive divergence. So, you know, September and October right here, this is where it was looking positive. But as we continued to rally in the market and got to those old highs, the advanced decline line, I'm not used to pulling this up, so it's kind of messy, you know, didn't break out to new highs, made new lows, and now we have new short-term lows here, and we're near new lows on the advanced decline line. Meanwhile, the market is not near new lows. So you take that along with the amount of stocks that are, please God, let this be the right one, that are below the 200-day moving average. Nope. I'm going to give up if I don't get it in 3 tries. There, I got it. Awesome. And you look at the stocks that are trading below the 200-day moving average, the same thing. This thing's been in a decline since early part 2015, and now I know why. Well, I already knew why, but now, you know, you get further confirmation of why we got all these long signals and they're all failing. Just weak breadth. You need more positive market breadth. You need more stocks with a 200-day moving average to have a healthier market rally. And as you can see, obviously, back in 2014 and 13, we had better levels. You know, it got pretty ugly there. But 2015, it's been really ugly overall. So now getting back to the market and the NASDAQ, here's another issue that now I realized it before once again, but now once again in hindsight, it becomes way more clear. Look at the oscillators, TSV here and MACD. Look at TSV's recent highs here and look where the price is. Now look at what happened whenever we hit new highs here in the NASDAQ. TSV did not make a new high. MACD basically hit the exact same level, no higher. And then look at what happened on the second time that it attempted a rally to new highs. TSV is now much lower, MACD much lower, and now if we go to stochastics and RSI, same thing. RSI, lower highs, stochastics, lower highs. And now you got RSI hitting new short-term lows, and I know stochastics aren't yet, but they are going to, and the market still, you know, is above these recent lows. So RSI is already confirming the weakness, while the others aren't necessarily confirming. We can once again look back in hindsight and see that, oh yeah, even our momentum oscillators, even though they were going in the right direction, they weren't showing higher highs and higher lows. So they were telling us that this most recent rally attempt was very weak. So, you know, I hate that we got so many signals, and like I said, I want to apologize for it, but if I didn't take any of those signals and this market blasts off to new highs, I'm telling you right now, I would be way more upset with myself, disgusted with myself if the market runs in December. And if it runs in December, probably runs through January, February, all the way through March, which is another historically bullish month for stocks. And I tell you what, to have not gone long these names and then to possibly miss out on a big uptrend, that would have been criminal on my end. But to take all the long positions and to immediately realize I'm wrong and cut and run, taking either tiny losses, tiny gains, or leaving stocks like ManH, which is a full sell, with pretty decent gains from our long signal, which I think was back here. You know, it's not good, but in this market, it's what's considered good nowadays. So rough market overall, kind of a longer video, but, you know, needed to go through everything. I would expect more selling. Hopefully we get a bounce around here, but it looks pretty ugly. But despite all that, You got to take the signals. And oddly enough, we got a signal today and a long signal. NVCR is a recent IPO. This is a beautiful technical pattern, and it's made even more beautiful by the fact that this pattern's the most recent pattern since its gap up has been occurring while the market just gets pummeled. So BOP rose today from an already decently high green level. Volume was higher today after a lower volume consolidation following the gap up on strong volume. So I'm going to go ahead and take it long. But here's the thing. It's just another 1% position. So if you're looking for a great long position that you need to load up on in your account, you don't take it. And if you do take it, you certainly don't use my final sell stop level 2502. Maybe you use the day before's final sell stop level of 2625. You don't let it go below 2625, or else you cut your losses if you take a big position. Me, it's 1%, so we'll see how it goes. If it gets, looks ugly before it hits 2536, maybe I'll use 2536 then. But for now, it would be 2503. Higher quality IPO. Why not? Let's give it a shot. Anyway, apologize for the longer video, but we really needed to go through all this. Remember, if you don't see me taking 5% of a signal, 10% of a signal, chances are if you have a small dollar amount in your account and or your commissions are high, just don't take the trade. Wait for my beauties to set back up again. They're nowhere to be found, but they will come around again. And or wait for the CanSlim and Perfect Speculator Scan quality names to give you that combo long signal. Because even when they fail like DY, I left flat. So from the long position in DY, I know it shows here down 2%, but in my account, the first half was sold with gains when it closed below the 20-day moving average somewhere in here, and the final half was sold at break even, and that was one of my largest positions in any stock. And I still left flat, and that's what you can do in this kind of market environment if you obey rule number 1, which is to always cut your losses. And then that goes to rule 2, always obey your stops. Never disobey your stops, especially in volatile, choppy markets like this, like the VVIX. Just to let you know, this is the volatility of the volatility, and it's off the charts. I mean, it's just completely off the charts. You got to go back to 1987 where we've seen volatility like this of the volatility. So it's quite impressive, everybody. So if you survive this round in the stock market, chances are you got a bright future ahead of you. Have a great weekend.